we are going to discuss the top 60 journal entry which you will use in your day-to-day business. The journal entry starts one like you did a sale of 100 dirham dollar by selling a car and you are in car business. So what entry you will do since you receive a cash? So in that case you will do the entry like cash account debit to sales 100. The first entry is completed. Now the entry number 2, you sales on credit. It means that you did not receive any money by selling a car. So you need to do AR debit to sales. So here you are not receiving the money. Instead of AR, you can write the name of customer. The name of the customer will be at sub GL level. Sub GL level. Now coming to the entry number 3. Once you receive the money, once you receive the money, receive the money from customer after credit term. After credit term. It means that you receive the money, the cash debit to AR. So your AR will square off here and there will be no balance left with AR. Now there is a entry as per your conservatism concept. Now you make the provision for loss, provision for bad debt, provision for bad debt. So what entry you will pass? You will say that bad debt expense debit to provision for bad debt, provision for bad debts. It means that you make the 10% provision, assuming that you have not received the money from the sales you did in the past. So 10 dirham, 10 dirham or $10, $10. Out of this, if actual bad debts happened, then you need to do the provision for say for 5 dirham. So provision for bad debt, it means now your provision is getting reversed and you need to reverse your AR by 5 dirham. So once you did the write-off, you receive the money as a bad debt recovery. Bad debt recovery. So in that case, first reinstate reinstate the AR. Okay, so in that case, you need to reinstate. It means that you need to do AR debit to provision for bad debts. Now 5 5. Okay, then you need to recovery cash debit to AR. Done. then this is like a recovery of bad debts. There is another way also. You can write cash debit to bad debt recovery. You can write like this. Now you have a discount. If you agree that I will give you a cash discount of 5% if you expedite the payment. If you expedite the payment. So in that case, this will be considered to be a cash discount. So for booking the cash discount, you need to say cash debit 95, discount expense 5 to AR 100. So this was the cash discount. Now coming to the trade discount. So in trade discount, you don't need to pass any journal entry because there is no relations with the expeditions. So in that case, what you will do, you will be simply recording your sales at 95, assuming the trade discount is 5. So in that case, your AR will be 95 or cash, depend upon the whether it is in cash or credit to sales of 95. So in that case, you don't need to record any discount. Instantly you record this at the time of selling of the inventory. So how many entries we did? 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. So today we learn about 10 entry 10 entries from cells. Similarly, we will learn 10 entry from purchase perspective. Purchase perspective. So how that works? First, you purchase the goods. You purchase the goods. First, in cash. It means that you will say that purchase account debit to cash. Say 80 dirham, 80 dirham. Now on credit. So it will be purchase account debit to AP or vendor name. So in my question it is 80. Now you make the payment. So AP debit to cash 80 80. Now what happened here? You asked some discount. So he agreed that discount will be given at the rate of 5% if you pay immediately. So now you need to think whether you have to pay or you have to deal. So assuming you are getting the benefit. So in that case, what will happen? AP 80 to cash 76 to discount received how much? 4. So this is a indirect income for you. So you save the discount. Now what will happen? This is up to here, this is fine. Coming to the, so this How many entries you have covered in purchase? So these are the entry you included for the purchase. Okay. So in that case, because here you are not providing any bad debts and allowances or something, so this is up to here, it is fine. Now when you are transferring, or while you sold, when you are selling the goods, or selling the goods, and if you are maintaining the perpetual accounting method, then immediately you need to reduce. You need to reduce the inventory. So in that case, cost of goods sold to inventory or purchase. So here, assuming that the same item is being sold. Now cost of goods sold debit to inventory or purchase. So this is the first entry completed. Now coming to the entry when you are purchasing any asset. Asset is purchased either on cash or credit. So in that case, if it is cash, then cash, or AP or vendor to an furniture machinery. So in my case, 500 dirham we purchase. So in that case, you record the furniture. Either you issue the cash or you will issue the cash, depend upon your term of purchase. So this 500 dirham you record as a purchase of furniture. So furniture is purchased. Now you need to provide the depreciation. So depreciation is a systematic allocation of cost. Systematic allocation of systematic allocation of expenses. So in that case, we have a many types, like many in many way we are calculating the depreciation, but the easiest and most acceptable is straight line method. So in this, say we have a cost 500, we assume the residual value or scrap value is 100, and the life of assets is for 5 years. Life of asset is 5. So what is the depreciable amount? Depreciable amount is 500 minus 100, yani ke 400. So depreciation per annum will be 400 divided by 5, in this 80 dirham or $80 per year. Depends upon the currency in which your functional currency or the reporting currency. So in that case, you need to say that depreciation expense debit to accumulated depreciation 80. Now after second year, you sold this asset for 450. So second year, it means you need to again provide depreciation account debit 80 to accumulated depreciation 80. So the working will be 500, depreciation year 180, so this is 420, depreciation year 280, 0, and this is 340. So this is your carrying amount of assets. Now you sold for, in your question, 450. 450. So 0, 1, 1. So the profit on sales is 110. So the entry will be cash debit 450 to furniture. Carrying amount is how much? 340 to profit or gain on sale of assets. This considered to be the gain 110. So this is getting balanced. In case of loss, in case of loss, so assuming sales is of 300 dirham, so carrying amount 340, sold 300, so there is a 40 dirham loss. How to record this loss? So the loss will be cash account debit 300, loss on sale of furniture 40 to furniture 340. Then we have a two more things. Two more things. First, impairment of assets, and then revaluation of assets. So these two we can discuss in later stage. Now coming salary paid in cash. So it means that this is a expenses. So salary expenses account debit to cash. Say 200. Now you paid insurance for 15 months together for 150 dirham. So there is a two way. Once you make a single entry and you say that insurance expense 120, prepaid expense 30 dirham to cash 150. Another way, or you can do alternatively, like insurance expense 150 to cash, and immediately you need to reverse prepaid insurance 30 to insurance expense 30. Now you have a accrued. Accrued means you incurred the expenses but yet to pay. Example, electricity not paid. So electricity expense to outstanding electricity. So we learn about the concept of accrual. Now coming to the deferred. So in the deferred, you received money in advance for delivering goods or services. You received money for 15 months of service. So 3 months we can defer. Okay. So in that case, we receive the cash debit to 1500 for the easy calculations. Cash account debit to advance from customer. Now every month's or deferred revenue. Sorry. So every month you will transfer money advance from customer to sales 100. Now income is incurred, income is earned, and you have already rendered the services but not yet billed. Not yet billed. So in that case you can say that deferred revenue debit to revenue means you have started earning the revenue. Once you build, you will say that AR debit to deferred revenue. So this is the situation very much similar to the outstanding expense.